So we would like to discuss all of these topics during the next 35 minutes, but I would also like to give you the opportunity to make like an initial statement. Of course, we've heard a lot, but where do we stand when it comes to navigating macro uncertainties, Fabrizio?
Well, I think the themes that we'll probably continue to see are very much the same as we see today. I think volatility being one, also fueled by the uncertainty in the financial sector, but not only. We are in an environment of structurally higher volatility, which is likely not to change in the near future. You heard my comments on geopolitics. I think that is going to continue to stay a big theme. This is not just about the war in Ukraine, which doesn't have an end in sight. In fact, with warmer weather may even pick up more momentum. It's not just about energy uncertainty, and we had a mild winter. We don't know how cold or warm the next winter will be, or decoupling between US and China. I think it's a broad set of topics which will continue to fuel volatility. Perhaps my third and last point, and today is an important day in that sense, the impact of monetary policy. I think it is becoming much harder to predict the outcome on the economic impact of monetary policy. The lags of time has become longer. We've seen this very rapid hiking not yet having its effect. We've seen the print on inflation this morning in the UK adding to the confusion. So I think that difficulty in calibrating how far to go before something truly breaks or before we are no longer in soft landing territory will continue to be a dominant factor.
Thomas.
First of all, thanks very much. It's great to be here. And forgive me a bit of patriotism, but it's great to have this conference here in Frankfurt, just a 10-minute car ride from the office. So we're really proud to have this firmly established. Let me just pick up a few points. Fabrizio already said he had to rewrite his speech. It feels it is very timely. And let me make 3 points. We have now seen the failures of Silicon Valley Bank, Credit Suisse, really remarkable events. First point, I think it really again highlights the importance of strong risk management that we have seen. I think Fabrizio was very right to make the point. First of all, we are in a very different spot in terms of resilience of the banking systems. Many commentaries already draw conclusions to 2008, right? We remember in March we had Bear Stearns, in September we had Lehman. I think it is very important to note we are in a very different spot and the banking system is much more resilient. Yet at the same time, I think it again is a wake-up call to be careful to look what are the weaknesses, what are the loopholes in the systems, and not to engage in a race to the bottom in deregulation. We have seen deregulation in the US for the regional banks that was preceding the crisis. We have seen the same tendencies we see in UK and in other spots. For us, from the perspective of financial markets infrastructure provider, we clearly see our core value proposition being risk management. And I think we see also, we saw it last year, central clearing makes the system stronger. It is independent, it is mark to market, it avoids the contagion effects in the system. And for instance, in the energy market crisis, that was remarkable. It really has worked well. Secondly, I would like to just briefly again re-emphasize the point we need strong and resilient capital markets. I think also the crisis highlight over the past 2 weeks that the macro environment is changing fundamentally. We had 7 years of negative rates. Now the liquidity is drawn out of the system slowly. It was abundant. It also exposes the weaknesses in the system. And it is very important that we continue to focus on building stronger capital markets because the government debt levels are really high and we need to have funding for all the challenges that were mentioned by Fabrizio earlier. And last point, just briefly, I think it is critically important that in the times of geopolitical crisis that we see, we just yesterday saw the handshake of Putin and Xi Jinping and their plea to close cooperation. We need sovereignty for Europe, not only in energy markets, but also in capital markets as well, because we need to prepare for future crises.
Florian.
Yes, many thanks. I think the last few days have showed some interesting lessons for us. First of all, of course, it is not totally surprising that in a challenging economic environment globally, which we see, very, very difficult environment, and also very, very difficult for central banks to deal with it, that certain individual business models of actors on the market of banks come under stress, which we have seen. I think there are specific reasons in each individual case why this has happened. And it's not surprising that in a challenging environment, some of these incidents happen. Still, I think it has also shown that the authorities are prepared to react and to deal with them properly. I think indeed also the colleagues in Switzerland, as Mr. Campelli has already stated, have made a good job, which should be acknowledged. Overall, they have taken decisions which have really helped to resolve the situation. Now I think it is for us, of course, to stay alert, but not worried. And when it comes to regulation, I think we should indeed properly consider really what has happened, what were the specific reasons, and avoid early conclusions or early generalizations of sometimes quite specific problems of banks. And then, if necessary, and with a rational debate, draw the right regulatory conclusions. We have no general tendency to deregulate in Europe, different from what has happened in the US under the Trump administrations, which has relieved mid-sized banks of a significant amount of regulation. We haven't seen anything similar in Europe over the last years. We are currently discussing the final banking package, the revision of the Basel rules, which are stipulating even a tighter capital regime for banks than before. So I think there is no general need to correct the direction or the way we regulate, but we should analyze it anyway in a sound and stable environment with a certain distance from the immediate events. This is my advice. And when it comes to the overall issue of where do we want to go strategically, I think the question, I totally agree with Mr. Campelli that we need, of course, more common European approach, more common European strategy, that we really have to unchain the internal market, which is a value we absolutely do not use in an appropriate way. There's a lot of unused potential. Still, I think the politically controversial issue is not so much the discussion national sovereignty versus more European integration. It's what should be the economic model for Europe? Shall it be a market economy where basically the government provides a positive framework for growth, for entrepreneurial decisions, for innovation? Or shall it be a system where the government indeed decides which are the sectors where to invest, or even subsidizes a certain field? This is, I think, the more controversial issue. What is the European economic model, market economy or more a state-driven approach?
Yeah, let me directly ask you about what's the thinking in Berlin? What should we have?
Oh, as said, it is controversial,
Yes.
as it is in Brussels. And right so, because we have seen, of course, that economic relations can be abused as a political weapon, and that authoritarian regimes indeed tend even to take into account that they suffer economic damage at home, to apply economy as a political weapon. And this is a learning of the last year, which indeed requires an open discussion. My preference is still that we shouldn't underestimate the dynamics of a market economy, and that we should not dream of indeed separating Europe from the global economy, rather rethinking dependencies and rather establishing new partnerships, for instance, free trade with Mercosur, hopefully someday also new agreements with the United States. This is my preferred option, and less so to think Europe as an insula in a very unstable global environment.
Yeah, Thomas, would you like to reply there?
Yeah, if I may jump in, Klaus mentioned earlier in a very diplomatic way the market correction mechanism. And I think something that you've said, Mr. Tonga, was really, you can see in that, right? It is a major sin that in the energy crisis, after we have seen markets really proving well, to extraordinary exogenous shock now to install something that is a price cap. And I know the position also of the government in Berlin who are active there. But we should withstand. We should take the time, analyze things soberly, and withstand to make interventions that in the end will be haunting us. Here already in gas markets, we see damages to volumes, and we will see the problems coming when we get to the next crisis. So I think also in these times, it is good to call a bit the trust on having market mechanisms work and providing them a smart regulatory environment that also is competitive.
Fabrizio, let me bring you back to the topic of financial instability, because I think everybody was kind of waking up to the fact that this is still a topic, or can actually really fast be a topic. So how did you experience what happened, like also with the failures of the banks in the US? Is there any risk of a spillover in your view? And also what happened with Credit Suisse?
Yes. It was the speed of what happened was clearly one of the characteristics that I think caught everybody by surprise. It's fair to say, and I think we just reiterated it here, the speed of decisiveness of the Swiss authorities, the coordination amongst the European and global authorities really was also a very decisive factor in bringing the level of uncertainty very quickly down back to a manageable calmness, which is the absolute most important thing, as we've seen, as these crises of confidence can become very hard to contain.
Do you think we have learned from the financial crisis?
Undeniably, but I would say we've learned a lot since then. I think the situation today, I mentioned earlier, on capital, liquidity, funding-based, profitable business models, regulation that has uplifted to a standard that has brought many more people on an even playing field, is really all that has contributed to a lot more stability, even in the face of what has been a very, very unstable few weeks. I do believe that the lessons that we're still learning are all pointing to more of that decisiveness, that collaboration that also Florian Tonker mentioned being needed to continue to intervene. And yet, this is a crisis that has ultimately found a predominantly commercial solution in its outcome, which is also an important learning from the financial crisis, not to have necessarily only public backstop as a solution. So that I think is a very important aspect. Spillover, I think in the short term, like I said, as the uncertainty being abated and as the volatility now being managed, it's nobody really knows. But clearly, right now things are seemingly in much better shape. We've had the kind of 3 now consecutive days of calmness, which is the best we've had since the Silicon Valley bank incidents. I would say what we should watch is the longer-term spillover, because inevitably, whatever will happen, we will probably see a contraction of balance sheet and funding capacity available, certainly by, for example, regional banks in the US, which will likely have a recessionary and certainly a deflationary impact. And we need to watch this closely. How will this play alongside monetary policy? What will this do to economic calibration of measurements by central banks? That's one of the things to watch.
One of the metrics criticized, though, in that bailout or forced-gun marriage or whatever you want to call it, was that bondholders were affected as well. Do you think that was a bad decision by the FINMA?
I think the solutions found actually were picked right from the playbook. Those instruments that were bailed in are actually instruments which are designed to be bailed in situations in which a company needs to have capital injected into it when external capital is not available because the investors are not prepared to put money in, or authorities have decided back in 2008 that there should not be taxpayer money injected into companies. And so those instruments were designed to do exactly that. I think in that sense, and also with the clarification that have followed, particularly by European regulators thereafter, I think it clarified that the capital structure of a company, particularly of banks, has been deployed, broadly speaking, in line with what those capital instruments were designed to do.
Florian, what is the discussion in Berlin when it comes to that renewed, sort of concern about the stability of banks? Perhaps you can shed some light on that?
I think there's a clear awareness that we have another environment today. We have stricter capital and liquidity rules, and we have, which is not to be underestimated, we have common European supervisory authorities which are established, which know the institutions very well for many years, and we have a sound set of rules which really allows to react Euro-wide. And so this is probably also a different set of conditions than applying in Switzerland. We have a large market, we have common institutions, and we have, by the way, also other rules when it comes to the order, which instruments to bail in which order. So we would indeed have done that differently in Europe, which the supervisory authorities have already stressed that the CET1 would have to be bailed in fully before AT1. But these are some different conditions we have. But we have the instruments, and we have reasons to be alert, of course, to take all developments serious. But we are better prepared, and therefore I think we must now, I think, contribute to that. Confidence is maintained, and we shouldn't forget overall that we have now the job to develop the economy in Europe after the pandemic and during the ongoing war, which needs to further encourage investment, particularly by the private sector. So that's, I think, the overall task we shouldn't forget right now.
Perhaps to also give you the room to comment on that topic, Thomas. How did you experience that, spike in volatility? Because I know you had a couple of volatility phases in the last years, but were you better sort of prepared from the systems?
I think we have experienced now periods of extraordinary market stress. And I mentioned earlier the energy markets, where of course, I mean, if you take out 50% of the supply, I mean, you have major implications in markets. We also have seen it, of course, during Corona and now during the past weeks. I think we are very happy that the system is very resilient, and we have all our activities as a financial market infrastructure provider performing completely smoothly and seamlessly. And that's why I also earlier said I think the structures of having strong independent risk management are very important. And if we imagine it about the events that we have just seen, they are all very particular. If we look at Credit Suisse, Archegos and Greensill were very major events eroding trust, very major risk management events. And that's what I also said. There are also, I think it's careful to look at what are the weaknesses in the system. One was in equity swaps. What are the areas where still sort of stronger standards are required? And I think it is, of course, for us, you see here our slogan, Architect of Trusted Markets, but trust is of essence. And we have seen how quickly it erodes over the past 2 weeks. That is why it is very good to have strong and resilient independent market infrastructures that sort of stay out of taking market risks.
If I may bring you back to the macro level and move on to the big topic of geopolitical changes. I mean, we've just seen President Xi visiting Russia, and they're looking at reshaping the geopolitical landscape, which is a bit of a threatening sign to see them, finding common ground. Perhaps again, Florian, is that something which Berlin or you have envisioned already, or what? Yeah.
I mean, we shouldn't forget that about 2 weeks before Mr. Putin started the war in Ukraine, he visited Beijing, and that was the last time those two met in person. So it's no totally new development that there is a sort of relationship. And I think democracies have indeed to face the fact that it's not the same to cooperate with an authoritarian state economically or elsewhere, or with another democracy. And if you cooperate with an authoritarian state like China, the ambitions and the motives behind that cooperation may different from the Chinese side compared to what we want to achieve. So it's much more politicized then, and that's, I think, is a lesson. I wouldn't advocate to say we only should cooperate or speak with other democracies, but we have to be more cautious. We should diversify our economic relationships more, and indeed not to put too much economic risks into one specific partnership, explicitly saying this with regard to China. I think this is something we really have to learn now, and not only in the next form of geopolitical tension.
Do you think it will also change the role Europe wants and needs to play on a geopolitical level, if you want?
We must, of course, improve that, but I think we shouldn't think it isolated. We should include as best as possible the United States, the partnership with the United States. But yes, indeed, we are currently working on a European Raw Material Act to procure key resources, key commodities, key raw materials jointly, for instance. And we need indeed more European thinking also when it comes to strategic geopolitical issues, absolutely.
Yeah, one of the key aspects of the sanction was, of course, ring fencing Russia as well from the rest of the capital market. So where do we stand now? And is that, perhaps, Thomas, is that something which is easily to reverse as well, or what's the situation now?
Yeah, I think, first of all, also to pick up on what Florian said, I think we have to be aware what are the strategic dependencies that we create. And we have created strong strategic dependencies in the energy sector, I think carelessly in a way. And I think we also need to be aware what other strategic dependencies do we have. I think it is good. Chancellor Scholz went to Beijing, still also being under heavy criticism, but to keep up the dialogue, but just to be smart on avoiding to be falling in dependencies which come and haunt you. And I think that is true for the capital markets as well. Klaus earlier also mentioned EMIR 3.0. That is exactly one of the pieces in the puzzle where not only we prepare for future crisis, but where also it is about reducing strategic dependencies on our financial market infrastructure systems, which I think is crucially important. And speaking about the topic of sanctions in Russia, I think there also the financial sector was, of course, used in a way as a weapon to put massive pressure there, and I think it has worked well. It was a lot of work, it was a lot of rules. We all have, I think, imposed these sanctions in a strong manner, and I think it also showed how strong Europe is and how strong the free world is when they have a unified and clear response to these acts of aggression, right? I think that was really noted, and I think that was also noted beyond Russia.
Fabrizio, you're nodding. So what are your clients doing when it comes to that? Or how are your clients assessing the geopolitical situation? Perhaps that's the right question.
I think the immediate dynamic we've seen is diversification of supply chains. That has been a theme for the last few years. I think it started more directionally after COVID in the US, where clients realized that the channels could be interrupted so swiftly, and there was an investment in diversification. I think the Ukraine invasion has resulted in a lot of European clients accelerating that dynamic. And the other one has been energy independence. I think we just spoke about independence, and the clients are realizing there is a very, very large need for capital expenditure, which they will simply not be able to fund by themselves or through their banking relationships. The cost of banking financing is also materially going up with interest rates moving the way they do. And so clients are also looking for a more diversified set of sources. And so it brings me back to that strong demand for investments that is coming, including on green transition, which many of our clients, despite the many priorities competing for their resources, has not been put on hold. Many clients want to stay on track on the delivery of data reporting, but also on the delivery of investments towards a net zero objective. I think the outcome of all of this is, it is very evident clients are asking us for capital to help them find sources of capital beyond the traditional ones that they're accustomed to, which is banks' balance sheet.
Yeah, Thomas?
We have no particular points to add. I would fully subscribe here to the points Fabrizio made on that. Yeah.
Yeah, perhaps we can expand the discussion on that medium-term and long-term challenge to transform the economy into a green economy, because clearly what you hear a lot from the business side, that we need to have rules, we need to have better rules also to invest. So how's that discussion ongoing in Berlin?
Well, it is ongoing, of course, and there's, I mean, the need of massive investment of both the public and the private sector is widely and largely acknowledged throughout party backgrounds or different political fundamental beliefs. I think the need for massive investment in Germany is there and it is acknowledged. I think we have to work on various issues to achieve that, both on EU level as in Germany. In Germany, for instance, we are currently accelerating planning procedures. We have already accelerated planning procedures for renewables and for LNG terminals. We work on similar laws for other parts of the infrastructure, which is key for a swift realization of all these investment needs. We need to provide a more attractive tax environment for companies which invest now, where we are assessing several options to provide in Germany. We need, on the issue of skilled people, workforce, labor, which is a very, very short resource. And when it comes to the capital markets, I think indeed European integration is now the task. So we, for instance, have started, Germany together with France, a common initiative to revitalize the European securitization market, to build a link between traditional bank financing and capital market financing, also through securitization, which has lots of potential, we see. And we will see further initiatives when it comes to capital markets union, because they're necessary.
We have a question from the audience, which is referring to the German debt reduction, the Schuldenbremse, or it's called debt brake, I think, in English. How can we actually do all the investments, essentially is the question, which we need, while at the same time reducing debt without raising taxes? So is that an impossible triangle, or is that possible?
No, absolutely not. It's a sound, by the way, it has constitutional character, so it's not some sort of hobby or deliberate exercise. It is binding law, but it has its reasons. It's not an obligation to reduce debt. It is a brake to slow down the incurrence of future debt, and it has a flexible component which allows to react on the shrinking or raising GDP. So it is a flexible instrument which allows for a sort of anti-cyclical fiscal reaction. Overall, in a time where all central banks in the world tighten their monetary policy, it would indeed be totally counterproductive to the goal to fight inflation decisively if governments would indeed loosen their fiscal policies. And therefore, all significant international institutions, from IMF to OECD, also European Commission, and the central banks themselves advocate that governments should now work on a credible path, indeed, to normalize their debt. A credible path, no sudden cuts or something like that, but it must still be steady and credible, and to become fiscally neutral. And I think that's precisely what we are doing, and we are wisely advised to do that.
So there's another one for you, Florian. You're a rare guest to Frankfurt. So what's the current view of the Ministry of Finance on the taxation of derivatives with regard, that's very specialized, to the limited offsetting of losses following the Bundesverfassung, I don't know, BFH submission to, okay, essentially, would you go for a change of taxation of derivatives?
Well, there is I hope I got the question right. There has been a tax law amendment in Germany 4 years ago or 5 years ago, which indeed limited the acknowledgement of losses from certain derivatives transactions for tax purposes for individual persons, not for corporates. That's indeed, that was very controversial. I voted against that amendment, I still do think it's not the right tax approach. We are of course assessing that. There are some legal challenges, but it's also a point which is debated politically. And I, in principle, think, irrespective of derivatives or other forms of income, we need a similar and equal treatment of profits and losses for tax reasons. That's always the right solution, and also in this case.
I would like to move on to the topic, because you were referring to that in your initial statement as well. One of the big uncertainties when it comes to the macro debate is where are central banks headed and what is going on with inflation. And we have seen that print in the UK this morning, surprisingly high. So what is your view, and how is the fast hiking cycle affecting actually the stability of the system?
It is clearly a very unenviable position, the one in which central banks are in. We are in the middle of the fastest hiking cycle in the US, for example, since the 1980s. We are a year in, almost exactly a year. I think it was the 16th of March last year when the Fed hiking cycle started, and yet we haven't seen the impact quite kick in as we would have expected, and possibly because the premise of the current inflationary cycle was unprecedented. We never had the type of liquidity injections that had existed prior at any point in history. So it is very hard to calibrate, and that is probably the biggest concern. If you follow the monetary policy textbook, this has to continue until you are coming much closer in range. That is the mandate of central banks, but the risk of creating instability or creating very acute stress in some parts of the market, as we have seen in the US regional banks, is something that clearly needs to be calibrated. I think there are three things. One of the features of this particular cycle is we have not seen unemployment come down. That has been one of the problems of this, the disappearance of workers that has created the premise for this unemployment level staying still so low, means that until we start to see the data pointing in that direction, probably central bank will feel that they are compelled to continue to act because inflation will inevitably not start to adjust. The result of that means, given the lag it takes from a hike to when it starts to find its impact on the economy, that probably this will not be, unlike many of the previous recessions we've seen in recent decades, a soft landing. It will possibly force quite recessionary activity already to kick in, and Deutsche Bank sees already in the US in the second half of this year a recession becoming nearly inevitable. The second thing I will mention is, and this is coming back to one aspect of this particular cycle, is that actually central banks have done in recent times a pretty good job at signaling managing markets' expectations, which gives them some wiggle room. The Fed has been very unambiguous around where they're going, and we should expect to continue to see that, and they've given themselves latitude to course correct if needed.
Thomas, perhaps your view as well on what this fast hiking cycle, how has that affected your business as an infrastructure provider for the trading world?
Yeah, I think as was mentioned, we had a long party with abundant liquidity. The central bank is like handing out champagne, and now the headache comes afterwards. It's slowly withdrawing it. I think it fundamentally strengthens our proposition that is around collateral efficiency, around risk management efficiency. That is what we are for as a financial market infrastructure provider, netting down risks and providing these efficiencies along the euro yield curve. That is where we are focused, and the environment has really changed because now collateral has a price to it again. Also, the balance sheet is scarce. That is, of course, why we believe that many of the services that we are offering, our core proposition is to be offering futures, swaps, repo within one larger netting set. That this really has a lot of importance in this new environment, which I also expect for the years now that are ahead of us to last.
Yeah. Given that our time is already up, I would like you to perhaps look into the crystal ball. Where are we in a year's time? Perhaps, Florian, perhaps you could also refer to what's going to happen to the Stability and Growth Pact, which is still, I think it's still suspended since the pandemic. So first of all, you.
The Stability and Growth Pact, the European fiscal rules, are suspended, but the suspension will terminate by end of this year. The Commission has already announced. So in 2024, the Stability and Growth Pact will be applied again. And therefore, of course, the EU member states are indeed required now to adapt and to develop strategies to comply again with the pact. At the same time, of course, there is a process of negotiating or renegotiating the process of the so-called preventive mechanism, so to prevent member states to come into critical situations, and the corrective mechanism once there has been a violation of certain standards, how the Commission will react. That's highly controversial, of course, because it goes at the very heart of how the Eurozone shall be steered fiscally. Our position as German government is indeed that we need reliable rules, clear rules, not too much political discretion. We need similar standards for all member states and a joint way of controlling them. Of course, despite the need, which is acknowledged, to allow for investment, we need also a credible path to a steady reduction of excessive debt ratios. And that's our position. We will see how the discussion will continue, but it's definitely politically a sensitive issue, as you will know.
Perhaps where do we stand from a political point of view on many of these topics in a year's time? So what's going to happen in Berlin this year?
Well, I don't tend to look into a crystal ball or something like that, but I tend to adhere to what our experts advise us, and most expectations say that we will either see a very, very small recession in Germany and the recovery in the second half of the year, or even will be able to closely avoid a technical recession. I think we have come through the winter quite well economically. We have assessed quite other scenarios 1 year ago, including the issue how natural gas will be supplied or even shorted, or who should have priority. All these issues were of concern 1 year ago. We have come pretty well through the winter. Now, probably should there be a point where we really see that recovery starts, we should send the right political signals to accelerate investment openness by the companies, really to foster and boost this process. And if we are successful in doing that, I do think that indeed 1 year ago we could see, or within 1 year's time, we could see a positive development of our economy.
Thank you, Florian. Thomas.
Yeah, I think if you ask 1 year from now, we will continue certainly with a pretty volatile macro environment. We will focus on our services and on our clients. I think there will be a lot of demand continuing to hedge. That also we have seen in the events that are really important. I very much hope that in a year from now, but that is probably too optimistic, we are again at peace in Europe and that the war is over. I think that is really lasting on all of us. I think in the midterm, for us as Deutsche Börse, we are very clearly focusing on the key drivers for the business, which are around digitization. That will be pushing us greatly, a new macro environment around higher interest rates that is very relevant, and of course around the topic of sustainability. And I, of course, very much hope in a year from now, I at least want to mention that we have the Future Financing Act, the Zukunftsfinanzierungsgesetz, to be enacted. I think it is very applaudable that the government brings forward finally an initiative to strengthen equity-based funding here in Germany and also in Europe. And I hope that the same applies in Europe around EMIR 3.0, the EU listing acts. I think the analysis that we've seen here, there's a lot of consensus from the sort of public sector, banking sector, also from us as a financial market infrastructure provider. So it is very crucial that some of these steps are now taken, codified in law, and that we act swiftly to strengthen capital markets in Europe.
Yeah, Fabrizio, what are you seeing like in terms of the big, perhaps milestones or challenges for the year as well?
I think the challenges we've outlined, I think milestones I would love to see in the next year are those reforms.
Yes.
The reforms I mentioned earlier. Advancing capital markets union, seeing the progress that Florian Tonker mentioned on the German Franco initiative on securitization advancing, making it easier, simple for retail participants to capital markets to continue. Clarifying what the end of equivalence for UK and European counterparties will mean for the availability of a single pool of liquidity and not starting to split pools and create pricing bases that will be detrimental to the continent. Those are all things I think would be quite important. I think in a year from now, it would be great to see some of these milestones achieved. And again, I'm worried that in 14 months from today, so just over a year from now, the European Parliament will go through elections, and that will ultimately slow down a lot of the decision-making capacity that Europe have until 2025. So I'm hoping that the current situation will be a catalyst for action rather than act as a distraction, so that Europe can continue to act boldly and together.
Well, thank you very much for your insights. And